This is Chad Stayskull from Eagle Wealth Management with our educational economic update for July 2018. In this month's video, I'd like to discuss some of the major headlines that influenced markets in June. I also hope to provide some insight into what these developments could mean for you as an investor. We are now halfway through 2018, and the markets have given us a lot to think about this year, primarily the increased volatility compared to 2017. If you recall, January brought new record highs for the major U.S. indexes. Then, concerns about interest rate jumps reversed some of the gains. Next, equities began to rebound thanks to positive economic data and corporate earnings before the current trade tension brought volatility back to the markets. Amid these fluctuations, the three major domestic indexes have had mixed results. In June, the S&P 500 and NASDAQ both adding a little less than 1%, while the Dow dropped marginally during the month. For the year's first half, the S&P 500 was up 1.7%. The NASDAQ gained 8.8%, and the Dow, on the other hand, was in negative territory for 2018, losing 1.8%. From economic data to political updates, much of the information we received last month also painted a mixed picture of current circumstances. For example, unemployment hit its lowest level since 2000. But the latest gross domestic product readings missed expectations. Also on investors' minds last month was the year's second interest rate increase from the Federal Reserve. When announcing the increase, the Fed gave an optimistic view of the economy's growth, and it indicated 2 additional rate increases could occur this year. Throughout June, we also experienced an array of dramatic geopolitical headlines. President Trump met with North Korean leader Kim Jong-un in a highly anticipated summit. Despite expectations, the meeting had little effect on stocks. Concerns over the trade war, however, weighed down markets for much of the month. From Canada to the EU to China, trade tensions between the US and many other countries continued to rise. The US added new tariffs to goods from some of our largest trading partners, and those countries promised their own tariffs in response. While the drama affected stocks, markets have remained relatively stable despite the escalating rhetoric. So far, fundamentals have been the true market drivers of this year. So, as we move into the third quarter, trade will be an important detail to monitor. But it's certainly not the only one. In particular, corporate earnings are going to be key. The most recent data indicates corporate earnings may have grown by 20% in the second quarter. If the results mirror those predictions, such performance would be the second fastest growth since 2010. Currently, the markets feel like they're on a seesaw between strong economic fundamentals and escalating geopolitical tension. Amid this back and forth, we will be searching for balanced perspectives on where the economy truly stands and what may be on the horizon. Well, that's it for this month's educational economic update. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220. We'd be happy to talk. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of July 2018.